Okay, let's dive right in. Picture this. You're navigating the aisles, checking prices, and maybe, just maybe, you've felt a slight sense of relief lately. Your wallet feels a little less squeezed than it used to. Turns out that wasn't just your imagination. Something, well, quite remarkable has happened with inflation here in India.
It really has. It's a story we've been tracking, and the numbers have delivered a pretty surprising headline. Retail inflation in May 2025 hit a level we haven't seen in, what, 6 years?
6 years
There's a
ago.
specific figure, 2.82%. I mean, think about that. The last time prices were this stable, well, tame, was all the way back in February 2019. Remember that? 2.57%.
Wow.
So inflation, it seems, has finally settled down for maybe a long, quiet
A
pause.
significant pause, yeah. For so long, price rises have felt like this constant, relentless drumbeat, you know?
Yeah.
So seeing inflation this low is genuinely big news.
Mm-hmm.
But it leaves us with a central puzzle. What triggered this slowdown? What specific forces have, conspired to bring the numbers down like this? And critically, for you listening right now, what does this 2.82% number actually mean for your daily life, your budget, your grocery bill?
That's precisely what we want to unpack here. We've been digging through the figures, the reports, the analysis you've brought to the table. Our mission for this deep dive is to lay out exactly what's behind this number.
Okay.
The crucial details sort of buried in the data, the potential pitfalls maybe lurking, and where the experts think this is all heading next.
All right, let's start with that headline number itself then. We're
Yeah.
looking at the Consumer Price Index, the main gauge for retail inflation. It dropped to a 75-month low, 2.82% in May 2025.
Yeah, and that's a noticeable step down from 3.16% just the month before, in April.
Right.
And the real punchline here isn't just the low number in isolation. It's that this marks the fourth straight month the CPI has stayed below the Reserve Bank of India's target, the 4% target.
4 months below 4%. That's significant for the RBI.
Hugely significant. For them, consistently being below target signals a real easing of price pressures across the economy. It provides a very different backdrop for policy decisions than what we've seen in recent years.
Okay, so the overall number is low, consistently below target. But if we sort of open up the hood, where is this improvement really coming from? We found a clear standout player, didn't we?
Oh, there's no doubt about it. Food prices are the driving force here. The dramatic fall in overall inflation is overwhelmingly thanks to a sharp correction in the cost of food items.
And when we say sharp, we mean sharp, right? Tell us about that year-on-year change in food inflation. It's pretty stark.
The shift is staggering, really. Food inflation plummeted to just 1.99% in May 2025.
Under 1%.
Under 1%. Now compare that to where it was just 1 year earlier, May 2024. A very high 8.69%.
Wow, 8.69.
Exactly. That's nearly a 9 percentage point drop in just 12 months. Imagine the difference that makes in your weekly shopping basket. It's the primary reason overall inflation looks so different now.
Almost a 9 percentage point swing in food prices in a year.
Yeah.
That is massive. It wasn't just 1 or 2 items, though, was it? Which specific parts of our grocery bill saw the biggest relief?
Yeah, several categories contributed significantly. Vegetables, in particular, saw a truly remarkable price drop, 13.7% year-on-year in May.
13.7%.
Yeah, and this was actually an acceleration from the already substantial 11% dip we saw in April. So the cost of your daily veggies is way down compared to last year.
That's incredible.
Yeah.
A double-digit drop in vegetables. What else helped bring the food numbers down?
Well, pulses also saw a steeper fall. Prices were down 8.22% year-on-year in May. That's compared to a 5.23% fall in April.
Okay, so lentils and things getting cheaper too.
Right. And cereals, while they still showed some inflation, the pace slowed slightly, 4.77% in May versus 5.35% in April. So staples like rice and wheat are either cheaper or increasing less rapidly.
And we saw that fruits, eggs, sugar, even confectionery contributed to this picture as well, helped bring food inflation to its lowest point since, late 2021.
Exactly. It all added up. And one interesting detail I thought was how similar the food inflation figures were between different areas. Rural food inflation was 0.95%.
Good.
Almost perfectly matching urban food inflation at 0.96%.
Huh. So that food price relief was felt pretty much everywhere.
It seems that way, yeah. Relatively widespread, whether you were shopping in a city or a village.
So potentially cheaper vegetables for everyone, everywhere. That's a genuinely positive note. But and there's always but when you dig into these details, this doesn't mean everything is cheaper, does it? There are nuances, parts of the economy where prices are still pushing higher.
That's a critical point, yeah. While food is leading the charge downwards, if we look closer, not everything is following suit. Fruits, for instance. Despite contributing to the overall drop in food inflation by being less expensive than a year ago, they still show significant year-on-year inflation, 12.7%.
Right, 12.7, still double digits. So that sounds like the base effect we sometimes talk about.
Exactly, it's a classic base effect at play here.
Could you quickly break that down? What does that mean in this context?
Sure. The base effect happens when you're comparing current prices to prices, say, a year ago. If fruit prices were unusually high last year, then even if they're still rising this year, the rate of increase might look smaller relative to that really high base.
Okay, got it.
So while 12.7% inflation is still high, it looks better compared to maybe an even higher increase previously. But it doesn't mean fruits are cheap compared to, say, 2 years ago. They're just less inflated than they were last May.
Less inflated compared to a super inflated past, but still pretty expensive overall.
Yeah.
Okay, that makes sense. What else isn't joining the low price party?
Well, perhaps more importantly for understanding the underlying pressures, if we look at core inflation, that's the number you get when you strip out the volatile stuff like food and fuel. It actually crept up slightly in May.
Oh, really? It went up?
Just slightly. It rose to 4.2% from 4.1% in April.
Okay, 4.2%. So outside of your grocery cart and your petrol tank, prices are still ticking up a little faster. What does that suggest?
It suggests that while these sort of temporary factors like good harvests and supply improvements for certain foods are pushing those specific prices down, there are still persistent inflationary pressures in other parts of the economy.
Like services?
Things like services, yeah. Manufactured goods, maybe wages. It's a signal that the price stability isn't, well, it isn't universal. Some engines of inflation are still running. We also saw urban housing costs increase slightly to 3.16% from 3.06%. So if you're renting in a city, you might be seeing prices edge up even as your vegetable bill shrinks.
That really highlights the uneven experience people are having, doesn't it? This mixed picture, low overall number driven by food, but some stickiness elsewhere. This is what the Reserve Bank of India had to grapple with when they made their big moves recently.
Absolutely. On June 6th, the RBI took pretty significant action. Seeing this consistent trend of below target inflation, they decided the time was right to act.
And what was their most prominent move? The headline action.
They slashed the benchmark repo rate, and by a hefty 50 basis points.
50 basis points, that's half a percentage point, right?
Exactly, 0.5%. This brought the repo rate down to 5.5%. And it's worth noting, this is a full percentage point cut just since February.
Wow, a full point since Feb. That's a pretty rapid pace of reduction.
It is quite aggressive.
And what else did they signal or do alongside the rate cut?
Well, they shifted their overall policy stance. They moved from accommodative to neutral.
Okay, accommodative to neutral. What's the difference in simple terms?
Think of accommodative as the central bank leaning forward, actively trying to support growth and maybe tolerating a bit more inflation to do so. Moving to neutral is like sitting back slightly. They're still watchful, but not actively stimulating growth or fighting inflation with quite the same intensity. It's more balanced, a kind of wait and watch approach.
Got it.
And they also took steps to increase the amount of money available in the banking system. They did this by reducing the cash reserve ratio, the CRR.
The CRR, right. Can you explain that simply? How does changing that inject money?
Sure. The CRR is basically the slice of deposits that banks have to keep parked with the RBI. It's like a mandatory savings account they can't touch or lend out.
Okay.
So when the RBI reduces the CRR, banks suddenly have to keep less money aside. That freed up cash becomes available for them to lend out to businesses, to individuals.
Right, more lending power.
Exactly. And the RBI reduced the CRR by 100 basis points, that's a full percentage point, but they're doing it in 4 stages. We're talking about injecting an estimated 2.5 lakh crore into the banking system through this mechanism.
2.5 lakh crore. That is a substantial amount of liquidity being made available. So the central bank is essentially saying, okay, inflation looks stable, let's provide some fuel for the economy.
Precisely. The sustained drop in inflation, consistently below their 4% target, gave them the room, the space they needed. With price pressures easing, they could pivot slightly and focus more on supporting economic activity and growth without immediately fearing they'd reignite inflation.
Yeah, it's like clearing a major roadblock.
Right. Once inflation wasn't the big immediate threat, They could accelerate action on other fronts.
And was this widely expected? The size of the cut, the other moves?
Well, the market and many economists were anticipating rate cuts given the inflation trend, definitely. But the size of the 50 basis point cut was seen by some, like economist Aditi Nayar, as a front-loaded move.
Front-loaded meaning?
Meaning they decided to take a bigger step early on, confident the data supported it, get it done, basically. However, she also cautioned that, having made a significant cut now, the RBI might just pause and assess things in their August meeting before potentially cutting again.
A pause makes sense, especially because there's still that big unpredictable factor everyone's watching, which is
the monsoon.
The monsoon. Yeah.
The monsoon is absolutely the wild card in this whole story, particularly for the future path of food prices, which, as we saw, are key. The current optimism around continued low inflation is heavily reliant on the expectation of an above-normal southwest monsoon this year in 2025.
So the hope is good rains equals good crops, equals good supply, equals stable prices.
Precisely. That's the equation everyone's banking on. RBI Governor Sanjay Malhotra expressed confidence, pointing to strong agricultural output, recently record wheat, good pulses production in the Rabi season, combined with the early onset of the monsoon this year. These factors, he suggested, set the stage for stable food prices ahead.
That sounds promising. But weather? Well, it isn't exactly a sure thing, is it?
Yeah.
What's the potential downside if the monsoon isn't as good or as evenly spread as expected?
And this is where the vulnerability lies. Damatirti Joshi, another economist, highlighted that vegetables, which have been so key to this recent price drop, are particularly sensitive to climate risks and sudden weather changes.
Right, very perishable.
Exactly. A patchy monsoon, floods in one area, drought in another. That could quickly disrupt supply chains and send vegetable prices spiking upwards again, even if the overall monsoon average looks good on paper.
So while the current food picture looks great, its stability over the next few months really hangs on how the clouds and rain behave across the country. It's a constant reminder of agriculture's huge impact on the wider economy.
It really is. It's probably the biggest variable we're tracking right now.
And you mentioned earlier, interestingly, that this experience of lower inflation isn't uniform across India. The state-level data reveals a very different picture depending on where you actually live.
Yeah, that's a crucial layer to this story. While the national average is 2.82%, your personal experience might be quite different. We saw some states experiencing significantly higher inflation. Kerala, for example, was way up at 6.46%.
Wow, over 6% in Kerala.
Yeah. Punjab was also elevated at 5.21%, followed by Jammu and Kashmir at 4.55%, Haryana 3.67%, and Uttarakhand 3.47%.
So if you're living in Kerala, hearing inflation is at a 6-year low nationally might feel quite, disconnected from your reality.
Absolutely. They're dealing with price increases well above not just the national average, but also way above the RBI's target. On the other end of the spectrum, though, one state stood out for its remarkable price stability: Telangana.
And what was their number?
Get this. Telangana recorded inflation at a mere 0.55%.
0.55%, less than 1% inflation. That's incredibly stable. What could explain such a massive difference between a state like Kerala and Telangana?
It really highlights how local factors play a huge role. Local supply chain dynamics, maybe state-specific taxes or policies, regional weather patterns, they can all create very different price environments. So while food prices may be easing nationally, regional factors can either amplify that trend or completely counteract it.
Interesting.
We also saw a difference between rural and urban inflation overall, though it was narrower than those state variations. Rural inflation was 2.59% compared to urban at 3.07%.
Okay, so we've got the overall number driven by food, some underlying pressures in core inflation, the RBI making big moves because of it, the huge question mark of the monsoon, and this very uneven experience across the country. What are the economists who track this predicting for the coming months? What's the outlook?
The outlook seems, I'd say, cautiously optimistic, but everyone, absolutely everyone, has their eye on the same risks, primarily the monsoon. Sujan Hodra, for instance, expects this low inflation trend to potentially continue through maybe October 2025.
Okay.
Possibly even staying below the RBI's own forecast of 3.7% for the financial year 2026. But he adds the caveat that we could see prices tick up later in the year.
So enjoy it while it lasts, maybe.
That seems to be the general sentiment, yeah. Upasana Bharadwaj noted that while we might be starting to see some early signs of vegetable and fruit prices nudging up again, the stability in cereals and pulses is providing a counterbalance for now. She expects inflation to remain benign for the time being, but stresses, and this is key, that future RBI decisions are absolutely data dependent. Any nasty surprises, like a poor monsoon outcome, could change the picture very quickly.
And we heard predictions that the number could go even lower in June. Is that right?
Yes, Madhavi Arora suggested inflation could dip even further, potentially to around 2.5% in June.
Wow.
This would likely be due to those favorable base effects, again, comparing June 2025 prices to a period in June 2024 when inflation might have been relatively higher, making the current rate look even lower. But she, like everyone else, is keeping a very, very close watch on the monsoon. That's the recurring theme.
Absolutely. Okay, let's circle back then. Why does this all fundamentally matter to you listening? What does a 2.82% inflation rate mean for your life beyond just hearing the number on the news?
Well, at its most basic level, lower inflation means your money goes further. It's simple, really. The value of your rupee is eroding much, much slower than it was previously. This is most directly felt in areas like grocery shopping, where, as we've seen, prices are much more stable or even lower than they were a year ago for key items. Your income simply has more purchasing power for those essential goods.
Which feels like a real positive shift after periods where prices were rising so fast.
It definitely does. It's welcome relief. But there's also a more complex side to this that the RBI is constantly balancing. Very low inflation, while good for your immediate purchasing power, can sometimes be a signal of weak underlying demand in the economy.
Right. If prices aren't rising, maybe people aren't buying.
Exactly. If consumers aren't buying much, businesses have less ability to raise prices and in some cases might even lower them to attract buyers. Now, while low prices sound great, if they're a symptom of the economy slowing down because people aren't spending or investing, that can have negative effects down the line on growth and jobs.
So the RBI's actions, the rate cuts, injecting that liquidity through the CRR cut, are partly an attempt to counteract that potential weakness, to stimulate demand because inflation is low enough to allow it.
Precisely. They're leveraging the space provided by low inflation to try and encourage more spending and investment, trying to give the economy a bit of a boost and ensure growth doesn't falter without triggering a fresh wave of price increases. It's that classic balancing act, managing both price stability and economic growth.
And we should quickly touch on the global picture, too, that's also playing a role here, isn't it? Helping keep things stable.
Yes, absolutely. Global factors are certainly helping keep imported inflation in check right now. Things like crude oil prices, for example, have been significantly lower recently. We're talking around $65 a barrel compared to nearly $79 a year ago.
That's a big difference.
It is. Lower energy costs feed into transportation and production costs across the board, which helps keep the price of imported goods down. And generally contained global commodity prices are also contributing to the stable picture here in India as well.
So it's a confluence of factors then. Domestic factors, dominated by that huge correction in food prices, a bit of a helping hand from global stability, and a very cautious eye on future risks like the monsoon, all leading to the 6-year low. It's definitely a nuanced picture beneath that simple headline number.
It truly is a significant improvement in the headline figure, offering tangible relief in really key areas like food. But the durability of that relief, as we've discussed, depends heavily on factors that are still very much in motion.
Okay, so as we wrap up this deep dive, the central finding is pretty clear. India's retail inflation hitting that 6-year low of 2.82% in May 2025 is, on the face of it, a major positive development. It's primarily fueled by that dramatic drop in food prices, and it's created the conditions for the Reserve Bank of India to take significant steps to support the economy.
But it's crucial to remember the layers beneath that headline core inflation is still a bit sticky. Some specific items remain expensive, and the unpredictable nature of the monsoon looms large over the future path of those all-important food prices.
Which leaves us with a final question worth considering, maybe for you to mull over. Given how much the stability of essential prices, like your food bill, seems to rely on something as fundamentally variable and unpredictable as the weather, what does that reveal about the deeper resilience and structure of the economy? Or think about that vast difference in inflation rates between states we discussed, from under 1% in Telangana to over 6% in Kerala. How might those regional disparities influence not just policy decisions going forward, but perhaps even impact things like migration patterns within the country, as people maybe seek out areas with better, more stable economic conditions? It's certainly a lot to think about the next time you find yourself comparing prices at the market.